Hi everyone, and welcome to our webinar. Happening to me in recent times is just really getting a bit, at times almost wondering why am I doing this for, and in America I really saw this and saw how much you as Australians and people, how much taxes we're actually paying and how it really does stop us getting ahead. And talking more and more to Australian business owners, and even as I'm starting to deal with a lot of international clients in Singapore and Hong Kong and places like that, and seeing just how the difference that it's making for them in their wealth creation just because they pay significantly lower tax rates and paying their taxes a lot better because of the way the laws work. And it really got me thinking about how much it stops us from completely living our sole purpose and doing what we're called to do. So what I really wanted to do today was to start touching on this and looking at just the mistakes that we make, and what I've noticed over many, many years of working with clients in tax minimization and helping clients right from the average mum and dad right up to high net worth people, and what I've seen actually happen. And I'll be telling some interesting stories today and stuff that you will find very, very useful. So just a bit of a disclaimer, obviously this is for educational purposes only, and it's not for you to go away and be a self-appointed doctor and set yourself up and to basically go and do surgery on yourself. That's the way I like to see that. Just because you've gone and read some stuff online about gallbladders or about issues in your body doesn't mean you can go away and do self-appointed surgery without taking a risk. Okay. So what you're going to be learning in this webinar today. So I'm just going to be covering a few things today. So obviously I've mentioned 7 mistakes, but what I want to particularly point out is why most Australians are paying too much tax. So you're going to really see why you're paying so much tax and really the cost that is actually coming your way by not taking immediate action to fix things up. So why Australians are paying a very, very high amount of tax. We also look at the structures used by the rich, and I'm sure all of us often sit there and just secretly wonder just exactly what structures are they using. Why is it that there's so many articles in the news, in the paper, talking about Apple, the big companies, about many, what they call the big end of town and how little tax they pay. Well, today I'll be sharing some of the things that are actually used in that, and just some of the very basic tricks that people use that really are going to be quite straightforward, but can save you quite a significant amount of tax. So that's one of my favorite things, and one of the things that many of my clients come and see me about, on how to really get advantage of structures and really start to get ahead. Because the fact is, if you're paying 30, 40, 50% of your money in taxes, as you'll see in this webinar, I'll show you some numbers and you will see the difference it actually makes and the cost that actually comes your way by not structuring yourself correctly from day one. So, and you will be quite shocked at the significant costs, and you will see why it's actually been said that living in Australia, it's almost like trying to play AFL football or play rugby league or a 10-kilogram backpack while you're playing the game. That's a bit how I see the Australian tax system. So yes, technically it's possible to play the game, but I'm sure you would agree that playing rugby league or playing AFL football wearing a 10-kilogram backpack every week would start to get a little bit tiring and certainly disadvantage you against others to some level. Then I'm going to be looking at how to instantly get rid of tax debt to save your business from ruin. So maybe some of you here are experiencing some tax challenges and tax hardships and concerned about the tax debt which you've got, and you want to make sure that you can save your business and thinking, what can I do? Well, the good news is that there are ways you can instantly save your business just simply by knowing some of the tricks used by the rich and wealthy. So I'm going to be covering some of the very clever tricks that have been used for years by the rich, and I've often said, tongue-in-cheek but sadly quite seriously, it would be very easy to be a criminal in this country if you wanted to be. I am certainly not promoting for you to go and be one, but it would not be hard to be one if you wanted to be one in Australia, the way our system is set up. So you can basically see how you can structure yourself to get rid of tax straight away, or currently if you're in a situation, how to save yourself. Then I look at why do the rich go offshore and how do they do it? to stack the deck in your favour. That's one of my really favourite ones, and more what people are coming to see me about. Just how do the rich do it, and how do they stack the deck in their favour? So, and for those of you who stay on to the end, I'm actually going to be giving a bonus. I've actually got a book which I've written on family trust called the Intelligent Trust Guide, which goes through about a 50-60 book, which I normally sell only to clients who bought my packages or buy it directly. But I'll be giving that for people who stay on till the end, an Intelligence Trust Guide, which shows and teaches you how family trusts work. Okay, I always love to give this quote by Kerry Packer, where he says, "I'm not evading tax in any way, shape or form. I am minimising tax, and if anybody in this country doesn't minimise their tax, they want their heads read. Because as a government, I can tell you, you're not spending it that well that we should be donating extra." And what I really want to get into is just the fact is governments and the rich, there's been this war for centuries, and the rich have always, one of their most important members of their team is their tax planner, their expert who helps them to really make sure they minimise their tax and that their wealth is properly secured. And I can tell you now that being properly structured is a difference between losing everything if something goes wrong or keeping your whole wealth. It can be a difference between getting a huge tax bill which almost cripples you and puts you behind for a long time, and really just paying a very affordable or very doable amount of tax. I like this quote too in the Duke of Westminster, a very famous case where pretty much in 1936 they said, look, people can minimise their tax absolutely as much as they want to. So if they succeed in ordering them as to secure them, however unappreciative the tax office or that might be, they cannot be compelled to pay extra tax. That one I love. So the big problem that we know is that business owners are paying way too much tax. That's just a fact. In Australia, we do start behind the 8 ball, and I'll be showing you shortly just how much it is. And it's interesting when I talk to various people, and I can even remember talking to someone recently who was actually criticising me about the fact that I structure people to minimise tax and said to me, look, you know, you should just, everyone should just pay their right amount of tax. And I kind of listened to them and let them say their piece. And then the conversation went on, and after about 15 minutes they made some mention that they worked in a job as some kind of performance drama or arts teacher, and they got paid cash. And I said, oh yeah, why do you get paid cash? I'm about thinking what they were saying. They said, well yeah, obviously, you know, we want to get cash as much as we can to not pay too much tax. And then they stopped and realised what they'd said, and I kind of smiled and I said, well, it's a bit hypocritical, but you're having a go at me for structuring people to minimise tax, whereas I do what I'm doing legally. You're basically illegally, you know, taking cash money and not declaring it, and that's shut up pretty fast. The point I'm making is, inherently in people there's a sense of fairness and right and wrong, and no one has an issue with paying taxes or making a contribution. I mean, if everyone was asked, do you think Australia is a great country to live in? The answer would be yes. Do you think that we have a really good lifestyle compared to so many countries? The answer would be yes. Do you think that it's important that we all pay some contribution towards what's going on, so we all pay our share? The answer again would be yes. Should we be paying half our money and the rest of it? And I think all of us would say no. There's an inherent sense we're being stolen from. And one of the things over in, it's interesting that very wealthy countries like Dubai and a few others, they pay 0% tax. So the story that says you've got to pay your fair share doesn't wash. And the more, when you look at the Australian budget and what monies are used for in terms of the level of welfare assistance and other expenses and the extreme expenses that are made by the government, as well as the fact that more and more people are depending upon government for their provision. In fact, I heard today that 40% of Australians either work for government or are some way involved in a quasi-government where they're dependent upon government. So that's crazy, really. So basically, more and more, there's a lot of productive people who are funding a lot of people who really are just civil servants who are not providing a massive contribution. So that's what you're dealing with right now. Business owners are paying way too much tax, and the failure to fix the problem is happening because really most people just do what everybody else does. In other words, we're terrified. I mean, we're absolutely petrified of the ATO, we're petrified of the government, we're petrified of what they can do for us. And I regard it a little bit like you're in school, and you got your lunch money, and you're just in a new school, and when one day some kid walks up and basically walks up and says to give it your lunch money, we're going to bash you, and there's 5 kids, so you give your lunch money, you give, say, half your lunch money over. Unless they ever said to you, well, you've got to give it to us because we protect you. You said, well, what if I don't want you to protect me? Well, then we'll beat you up. And you kind of, you know it's not right, you know what they're doing is wrong, but the fact is if you kind of stand up for yourself, more likely you'll be beaten up. So eventually most kids will probably just end up paying the money until someone bigger than these bullies, like teachers, get onto it and stop it, or some bigger bully turns up and beats them up. And likewise here, really, the question is not so much should we be paying some kind of tax. I think everyone would agree that we should. I personally have no issue whatsoever. The issue is paying the amounts that we do and not structuring ourselves properly to make sure we do it. There was a very recent article which came out where they got a committee involved looking at our system compared to others in Australia, and it was pretty much admitted that we've got one of the worst systems in terms of inefficiency, and they reckon at the current rate, by 2100, that year 2100, we're going to have 8 million pieces of legislation if laws keep growing in complexity. Now clearly that's insane, but it gives you some idea of what we're dealing with. The fact is, most people are just doing what everybody else is doing, and they're afraid to kind of rock the boat, pay the taxes, and just basically keep the government happy. And not just that, they're afraid to minimise tax because the ATO have come out breathing fire in the newspaper against the offshore global multinationals and against people doing it. They've cracked down on a lot of people doing tax minimisation. So it kind of scares people off. And again, is that deliberate? I have no doubt that is their deliberate intent to make sure that they preserve their revenue base. So if you resonate with what I'm saying so far and you feel that, just type yes in the chat box. So if you feel that way, just type yes. Let me kind of get a bit of an idea. Yes, Alison, I agree. When you say it's applicable to New Zealanders too to some level, yes for Stephen. Yes. Yes, that's great. Yes, Stephen, Glenn, Steve Goodwin, Warren, yep, Glenn, yep, there's plenty of people all agreeing with me, yep, I'm getting yeses everywhere. So we all pretty much know this, that we are paying a ridiculously high amount of tax. And look, I like to get everyone involved. That's why I will be asking you regularly to kind of type in the chat box, and I'm doing that to basically keep us engaged because I want it to be interactive and for us to learn and really learn something here. Because I can tell you now, if you just do what everybody else does and you depend upon your financial planner or your tax accountant, just your local person, and assume they know what they're doing, I can assure you that pain awaits you. And one of the things that's made my life go to the level I've got to is being willing to think outside the box. And I've actually got my kinesiologist on the webinar, who I think very highly. I've been working with for many years, and I work with her because she thinks out of the box with her health. And one of the things is with my health, I learnt very quickly that thinking outside the box with my health, if I didn't, I would basically end up very sick very fast a lot of the time. And I've seen things happen like get myself fixed from dyslexia and from RSI and gallbladder, basically fasting my gallbladder, and rather than getting it taken out, passing all my gallstones and keeping it, and getting myself desensitized to allergies to grass and things like that. So these days my health is generally pretty good, and when I do feel any signs of sickness, I know how to deal with it quickly because I think outside the box. And you certainly want to be doing that when it comes to your tax, and you certainly want to be doing that to make sure, otherwise you will pay too much and your journey to financial freedom will continually hit brick walls and obstacles. So now I'm going to give a few scenarios here and just ask you if any of this actually sounds like you. You have a highly profitable business and making good cash, but after all the taxes, typo there, it's hard to get ahead. It frustrates the heck out of you. You say there must be a better way. You've considered moving offshore, but you're unsure how to do it, and you want to be 100% sure it's legal. If that sounds like you, just put yes in the chat box. Just interested to get a bit of an idea. as to people here and what your problems actually are, so I can really address this and help you here. So if that sounds like you, just put a yes in there. Yes, thank you. Yep, thank you there. I've got a few yeses coming through here. Okay, yep, Greg, Robin. Okay, you're nearly paying half of your hard-earned business profits and taxes, like income tax, GST, pay-as-you-go deductions. Isn't that a killer, that pay-as-you-go in GST? And your accountant, you don't really feel is doing anything about it. You feel like you're making everybody else rich, especially the government, while you're doing all the hard work. So you're basically doing all the hard work and the government basically and everybody else. So just type yes if that's you, if you feel that way. Yep, there's a few more yeses coming here. Yep, great. Yep, thanks Stephen, that's very nice, well articulated. Yep, I find that's the common complaint. So really what I'm doing here is I'm bringing out what people say to me and what people feel, and like I put it, what people actually say at their barbecue. So when everyone's around the family barbie and all having a chat, this is the kind of things that you say. But you feel like you're making everybody else rich, and I can tell you now, I once felt that way very much so. I would work my ass off, long hours in the business, and somehow it seemed that everybody else got rich, all the other bills got paid, and after all my years of work, I had not much to show for it. So now I've been doing something about that in recent years and a lot happier as a result. Your business keeps falling further behind as your cash flow and reserves keep going down, 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 down. But your ATO best debt just keeps going up. Now I'm not going to name you for privacy, so don't worry, but if that's you, just put yes, just to give me an idea of who's on there. And the main reason it helps me just get a bit of an idea as to how much time to spend on each one, because if there's not many people like this, then I won't say much. So that sounds like you, just put yes. If you've got a bit of a, putting it in other words, if you've got a bit of a big tax bill in your business which you're just kind of struggling to pay, then put yes in here. Okay, just one yes, okay. Not as many on this one, so unless I get a couple more yeses, I probably won't spend as much time on this part. You feel like that your accountant is just a glorified bookkeeper who never thinks out of the box and who works more for the ATO than for you. Now just type yes if you feel that way. Yep, I'm getting lots of yeses hitting me here. Getting inundated. Yep, sadly that's the account for many people. Yep, keep coming. Yep. That sounds like you, just put yes. Like I said, don't want you falling asleep on me. I'll have to start doing some singing in a minute. Okay. You live in constant nervousness of the ATO targeting your business in a tax audit and hitting you with a huge bill you can't pay. In other words, you don't know if your business is structured well enough to stand up to the test. So if that's you, if you're a bit nervous of getting an audit and you're really not that sure how well your business is structured, put a yes. Because it's good to name your fear. If you've got a fear around it, yep, thank you. A couple of fears coming through here. So yes, if that's you and you're nervous about it, then definitely, because you don't want to be nervous. Fear stops people building wealth. Let me just share one thing I find. A lot of clients, I find that when I'm honest to them, actually don't. They're actually not growing their wealth because they're nervous that if they grow a lot of wealth, they might lose it all in a lawsuit, the ATO, going after them, penalties, divorce or whatever, and prefer to stay small. It's a very common fear that I find people actually face. So one of the things I also do, is I actually help people to clear that in their mindsets and thinking as well, because this is a very important thing that can rapidly stop you. So if you're nervous about an audit and you know your structures may not stand up to it, and that's something that's very important. So the question I want to ask is, are you ready to do something about your tax and your structuring and put more money in your pocket where it rightfully belongs? So are you ready to do something about your tax issues and put more money? So if you really are ready and you're here today because you're ready to take action, then just type yes. If you're like, yeah, you've got to do something about this, and that's why you're here. Yes, great. I'm getting a few yeses come through. That's it. I'd be hoping that most of you, or at least many of you, would be saying yes, because Action takers is something that actually gets success. One of the things I found, I've started working with a new business mentor in recent times, and one of the things he's been doing with me is pushing me beyond comfort zones I ever thought possible in terms of taking action. Because one of the things I've learned is taking action in whatever area of your life is where you get results. And the fastest and the successful people who are wealthy and the people who are not are people who take action really quickly. I can remember years ago, I was at a seminar and the guy actually offered a huge prize because they were doing a party that night where there was like a function that evening for all the people at the seminar. And they said the people who turned up best in the best dressed costume, looking like Austin Powers, would actually get a huge cash prize. Now everyone kind of groaned and whinged about it because it was Saturday afternoon at 4:30 they announced it. Now getting costume hire places all would tend to shut. So everyone kind of went away, you know, complaining. I actually got on the phone and I was actually with someone at the time, actually with Grace, my ex-wife, I'm still very close to, and we actually rang up and ran around quickly and we found a costume place that was open until 5:30. It was now 4:50 by the time. The problem was it was a 25-hour drive. We managed to convince a taxi to go there, pick up the costumes, bring them back. We dressed up in the costumes, turned up, dressed up in the most brilliant Austin Powers and Felicity costumes. We got ourselves done up with makeup and we won the prize hands down, got a huge cash prize. I can't remember exactly, it was a few $1,000s or something, just cash on the spot. And one of the things that the guy said, he goes, I can't believe anyone actually did that. He goes, I was curious to see if anybody would go that far. He said, so it kind of taught me a lesson that taking action quickly gets you the fastest results and the fastest rewards. Okay, so the fail solution is blindly trusting your accountant to fix the problem and hoping it just goes away. And many people do put their heads in the sand. Many people do just procrastinate and just hope things go really, really well. So basically what people tend to do is go, look, like let's say financially things aren't working. A very common one is people with religious background say, well, God will sort it out for me. You know, God's got his hand, it will fix. Well, from someone who came from a church background, I kind of waited for years myself and that didn't quite work. I realized that God helps those who help themselves and take power and started to really see some abundance come into my life. So God helps those who help themselves. Some people go, well, look, you know, it's just basically hard work and thinking and I'm sure someone will take care of me. Well, not necessarily. Ultimately, the one who's going to fix this is yourself taking action and taking power over your life. Successful solution is learning and using the law to your advantage to slash your tax. And the biggest one here is working with the same experts used by millionaires and by guys like Kerry Packer, Alan Bond, and many of the others who built their high net worth and successfully done this. So, just type yes if so far you've realized that you've really got some tax issues that you need to do something about. Just type a yes if you know you've really got that. Some tax issues which you can see you're paying too much and you've got to do something about. Yep, I've got a few texts coming through. Yep, great. Okay, so just a bit about myself here. As you can see here, over 26 years experience, including 16 years in private practice. I do a lot of international tax minimisation and Australian tax and wealth protection. Okay, just a quick introduction so you can meet some of my family. This is actually 3 of my 4 boys. We're in America together. That's Edward, James and William from the left. Wonderful view, as you can see. That's Lookout Mountain on the border of Georgia and Tennessee. And I could tell you what I fell in love with that place. I love Tennessee and I love Georgia. Some of the scenery in the Appalachian Mountains and Lookout Mountains is as good as anything you'll see. So that's over in Tennessee. That's over in Savannah in Georgia. If you ever go to America, you've got to go to Savannah. It's meant to be one of the prettiest places going and it doesn't let you down. That was an old candy store in Savannah. That's literally what Savannah is like in almost every street. Quite breathtaking, isn't it? So this is where I was at when I went to America last month. That's Savannah too. You can see on the left, you can see the horse and cart. And yes, the streets are still cobblestone streets, and yes, you still see horse and carts regularly. Quite an amazing little place. And you got Charleston on the top right, and then you've got a very strange sight on the way from Arizona into California to Los Angeles, some windmills everywhere, which I took some photos. And this is my youngest, who didn't go to America with me. He chose to stay home. Yes, the guy on the left with my son looks like John McEnroe, I know, but it isn't. But yes, it does have a bit of resemblance, doesn't it? And that's Josiah, my youngest. So that's all of them together at the Royal Show having some fun. Okay, now we're going to get on to things and look at why most Australians are paying way, way too much tax. Okay, so the average Australian pays somewhere close to 69% tax, and 48% is basically of bankruptcies or major problems in taxes or businesses are caused by government directly or indirectly. And the average business spends a minimum of 1 day per week purely working for the government. So purely working for the government. So what people actually take home after tax on their hard-earned income is pretty sad here. I mean, what's amazing is Australia is actually only the 7th worst. I thought we would have been the worst, and I think most people would, but of course we're not. So if you're on an income of $400,000, you'll take home less than 60% of the money on income tax alone, ignoring stamp duty, ignoring GST that you pay, ignoring mortgage duty, ignoring luxury car taxes, ignoring all other taxes, fuel taxes. I'm sure you can see very quickly how easy it would be to hit 60 or 70% of your money paid in various forms of taxes. I mean, why do we pay so much tax? Basically, we've got a progressive tax system which comes from communism, basically. If you want to actually see where progressive tax came from, it actually comes from communism. Marx recommended it. Australia did not have this until 1915, and neither did America. So all it means is your tax rates go up, the more income you earn. Australia now, your highest tax rate is 48.5% of tax, but that's not all. The most insidious one is the bracket creep, which means that by not changing the brackets, incomes go up each year as salaries go up, and you actually end up having a tax rate increase every year effectively just by the brackets changing for tax every year. $80,000 income now is nowhere near what $80,000 was 10 years ago. On top of that, if you're a business owner, you're paying BAS every quarter, GST and pay-as-you-go, and it's why so many business owners are now saying, forget all this, I'm just going to move overseas. It's too hard. Because you get your money come in, you have a good month of cash flow, next minute your BAS hits, next minute you've got income tax, so it makes it very hard to accelerate. And I have had clients who said to me they couldn't believe it when they've moved overseas or they've changed everything around. Often in 2 years they've got more results than they got in 10 or 15 years of business previously, just because they no longer are carrying a 10-kilogram backpack on their shoulders. Basically, our tax virus is out of control. So really, we are the 8th highest tax nation in the world. Now, what's actually funny is that we're not the worst, and France is actually the worst apparently. And Hollandia, the French president, openly admits, I don't like the rich. Rich can pay as much as 60% tax. The bracket creep, some stats here, 60% tax increase from bracket creep alone if you have an income of $75,000 over the last 10 years. I mean, that's just absolutely horrible, and I'm sure you would agree. Okay, now let's just actually have a look. I think what's really good is let's take a look at some numbers. Let's look at the cost if you do not do basically good tax planning. So in other words, if you just ignore the issue and don't really settle down and say, I am going to sort this out. You take too long to get ahead and you seriously risk losing your financial freedom or independence. So anyway, the cost of not tax planning. Let's look at $100,000. So you got $100,000 invested for 10 years at 20% per annum. So I want you to take a look at the cost here over 10 years by not properly structuring yourself. After 10 years, you will have $284,000 odd, 463, if you paid a top rate. Now, that's not really all that much because on average, every 10 to 12 years, your inflation doubles things up. So in all intensive purposes, on a high tax rate, you don't really get much growth at all. You only really grow about 40 to 50% over 10 years, which is not really much different to leaving your money in the bank. That's how severe a high tax rate can actually be. A 30% tax, you've got $402,000. Well, yeah, it's a bit better. But again, you're only really doubling your money over 10 years, which again is good, but could be better. Let's say that you're in your 40s or 50s and you don't use superannuation. Well, superannuation, you can keep your tax as low as 15% tax. So suddenly your $100,000 invested for 10 years through super is now worth $540,000. And I just wanted, and then if you pay 0% tax because you've gone offshore or taken advantage of really good tax deferral planning, you have $726,000. I'll show you 20 years in a minute, but just for a quick interlude, there's a book called The Book of Wealth that was written about 100 odd years ago, and it was written by the wealthiest families in the world. Somebody wrote it for them, and they kept the book secret. It only came out about 20 odd years ago, and basically it teaches the principles of how to get super wealthy. What's interesting is that one of the things the book says, because I've read parts of the book, is a long-term view. A speculator or short-term thinker only sees wealth building as short-term. A serious wealth builder, like someone who, the Warren Buffetts, the John Templetons, the Carl Icahns, the Bill Gates, one thing all of them do, George Soros, they're long-term thinkers. They invest for 10, 20, 30, 50 years, whereas many of us want a quick one-year return. And I know I've been guilty of that at times. But basically, that's the difference between the super wealthy and those who are not so wealthy. So, for example, many people don't put it in super because it's like, well, I'm 40 right now and I can't touch it for 20 years. Well, let's just take a look. Imagine if you're 40 years of age right now and you don't touch it for 20 years. Let's just have a look. If you pay 48.5% tax, you've got $809,000. Works out you effectively, after inflation, more than double your money. Okay, but pretty slow growth, isn't it? Very slow. If you pay 30% tax, you have $1.6 million. Now you've had a 200% increase in your wealth. Now, imagine if you're 40 and you basically do it through super and hold till you're 60, you're going to have 2.95 million. That's going to be like a 700% growth rate if you even after allowing for inflation. It's a 3,000% growth rate right now, but it's a 700% even allowing for inflation. And if you can go offshore, it's $5.28 million. That's actually a 1,300% growth rate even after inflation, or 5,282% growth rate. So the cost of not tax planning is horrible, as you can see. So every year you don't do something about this, you're costing yourself severely. Now, to give you an example, the difference between just 1 year, as I'll show you shortly, of starting 1 year later as compared to starting straight away can literally cost you as much as 10 to 20% of your growth because of the way compounding works. So I'll show you that in a minute when I show you the costs. Let's just take a quick interlude here and look at BAS. So we've been talking about income tax. So this is how BAS works. This is where businesses get into more trouble because basically they treat tax monies collected as their own and fail to put it aside for tax. So BAS payments have to be made by a certain date and there's substantial penalties. You've got to excuse my voice. I have had a slight little infection. So well on the way to getting better, but still it had the odd matter. So you basically, by not lodging on time, you can get a $550 penalty. So and interest and further penalties. Okay. Okay, director's penalty notices. So this is important to understand as a business owner. So just for a quick interlude. So the question is, can an owner be personally liable even if they got a structure? So one very important point to notice here, and this is one secret of the rich, they know the power of using companies, trusts or entities. Because let's say you're running a business and you've actually got tax liabilities. The tax liabilities actually apply to the business, not to yourself. So if you've got a company or trust, it may well be that you're not liable for those taxes and you can shut the company down, which I'll show you shortly. However, there are some situations where you may be. So you've got this thing called director's penalty notices. If one of these is issued, or what's called law changes, which can make you liable in certain situations. So the basic rule is that company tax, GST and pay-as-you-go, you can walk away from personal liability if you plan properly. The reason I've interluded here, the point I want you to get here, is that if you're properly structured here and if you follow the law and you know how to do paperwork on time and in a certain compliant way, you cannot be personally liable for any company tax, GST or pay-as-you-go if your business gets into trouble. Whereas by contrast with, if you don't properly structure yourself, you can be made personally liable. So the cost can be significant. The cost can literally cost you from having your life back. It can mean that if your business gets into trouble, you can get your life back if you're properly structured in no time and just deal with the emotional grief of mucking up your business. If you aren't properly structured, you can lose everything and take 5-10 years. So really, I always ask people, how much is 5 to 10 years of your life really worth? Let's look at some case studies of real clients to see the cost here, just to give you a little bit of an idea of what happens when you don't tax plan. So right now I've got a client who owes $158,000 to creditors, including $71,000 to the ATO through his building company. All he has to do is pay $20,000 to $25,000 to me, and I can erase all the debts, including the ATO debt, 100% legally, and he can start again. And it's because he's been structured a certain way, and there's certain things we can do that means, provided he pays me the 20 to 25 grand and pays the $5,000 to his company, then he can walk away from that debt and start again, rather than be trapped with a 158 grand debt which he's paying off for years. Sadly, he still hasn't done it because he keeps claiming he can't find the $20,000. So I basically said to him, and sadly, he will end up owing a lot more, as I've seen many clients, and going through a messy investigation, because if the ATO initiate the investigation and go after it, well, in all likelihood, their liquidator is more ruthless and they will bankrupt you very quickly, as many of my clients who have not structured properly have found out to be a detriment. So it's a huge cost. And it's not just the financial cost here of paying 158 grand, it's the emotional cost and having a debt hanging over your head to stop you really growing your wealth and really building it. So a big cost here, as well as the stress. I have another client here who owns 2 businesses, owing over $200,000 to the ATO in GST, pays Fortunately, she lodged her bachelor's on time, had the right structure set up and was open to instruction on how to improve. For less than $50,000 of fees, we were not only able to legally remove a large portion of the tax debt, put it this way, a lot more than we charged her, put it that way, but we could set her up to ensure the issue would never happen again. We also helped her plan and find a buyer for one of her businesses. She's gone from near bankruptcy to well on the way to financial prosperity, because now that she got her freedom back, she got her time, she got her money back, she's now able to make some good money. She now could put her energy into building her business, knowing her tax debt was in hand. She's now able to get ahead. So pretty good. Another one example. I have a client here running a beauty business, owing $127,000 to the ATO in pay-as-you-go and GST due to going through a hard time. She was stressing from poor advice, burden of debt, and was at her wit's end. We showed her how to restructure her business fully compliant with ASIC to reduce the debt from $127,000 to $25,000, as well as ensure she had a good structure for the future for just $30,000 in fees. So we were able to reduce her debt down to $25,000, $102,000. So I'm sure you can see straight away, pretty darn powerful. Who's finding this really enlightening so far? Who didn't know you could do this kind of stuff? Just put yes if you didn't know you could do this. Yep, there's a few yeses coming through here. Yep, great. Great, yes. No, it's good stuff, isn't it? It's there's so much you can do here. I've got another example here of a client who owed $103,000 to the ATO, came to me last year, pretty highly strung up. Company barely breaking even, tax was always up his ass, you know, chasing him for money, and we kind of went through it, we restructured it, we repositioned it. He basically paid me $20,000. We shut the company down. We made sure the paperwork is in order. Let me just make this very clear here. The biggest thing with doing this is knowing how to do the paperwork and do things legally and properly so it's done smoothly, because a lot of horror stories have come out with people trying to do this and getting in huge trouble with the tax office. And the thing is, you will if you don't work with someone who really knows what they're doing here, because you've got to follow a very strict procedure, and ASIC made it very clear. So the basic result, $20,000, no company, all liquidated, all debt's gone, starting afresh, and basically able to start a new business with no debt. So thank you very much, it's inspiring. Thank you, Sahata. So yes, there's a lot you can really do when you know what you're doing and you realize you can actually save your situation, and you can really start to get yourself ahead and realize it's not all doom and gloom. So if you've got a profitable business, which I'll show you shortly, there are things you can do to really put more money in your pocket and make more contribution. One of my private beliefs is I'm a big believer, and you'll see more and more in my webinars in the coming days, my very deeply held spiritual and metaphysical beliefs. And my belief is one of the reasons we have such heavy taxes in Australia as a nation, as a collective consciousness, so to speak, is because I think that the more we kind of have greed or hoard for ourselves, the more we attract people wanting to take from us. Whereas once you start being willing to contribute and give beyond yourself, you tend to attract, and doors tend to open to free you up more, so you can give more and have more money to yourself. It's almost like a universal law. And universal laws is one of my real passions. The things that actually drive the universe, but they're sort of hidden laws that aren't on the surface. And who here is into universal or hidden laws? Say yes if it's something that really interests you, the spiritual, the law of attraction, the metaphysical, the hidden laws. Put a yes. Yeah. Yes, it's flying here everywhere. Great. Because you want to be, because in the coming days we're in a very interesting time on the planet right now. We're in a time where I think we're in a very interesting time. Since 2012, when I was in America and I was at the healing seminar, one of the things that the guy said was he and the group of Native American healers, and I was watching some amazing healings happen, including for myself, for my kids, and all kinds of stuff, and watching them purify water before my eyes, and actually seeing water that was actually full of chlorine and other stuff, him just using energy to purify the water, and we drink it, and it was like the purest spring water we'd ever tasted. And one of the things that the guy was saying was a lot of them do what's called conscious measurement and praying and just kind of feeling and seeing, and they've all said since 2012 there's been an exponential jump in the energy and awareness and spiritual power of the earth. So they said we're in a very, very interesting time to really accelerate our growth and to really start to make changes. So this really is the time. If you've kind of observed that or noticed or felt that, just type a yes if you know what I'm saying, just so I can see who resonates and who knows where I'm coming from here. Yes. Yep, thank you. There's a few yeses coming through. Yep, so we're really in that kind of time of deeper spiritual awareness. And my new business mentor made a very powerful statement to me a couple of days ago on a call, which really got me thinking, because he works with some of the highest net worth clients in the world. He works with a lot of very high net worth clients, and he's extremely expensive, but best money I've spent. And one of the things he said to me is, he goes, some of the most spiritual people in the world are the wealthiest people. And it kind of stopped me because often we tend to disconnect or separate wealth from consciousness. But he basically reaffirmed to me that the more wealthy people are very often very spiritual, because behind the scenes they're giving great contribution. They're not people running around talking about all the great spiritual power and things they're going to do. Just behind the scenes they're making massive contribution. So it's a really interesting and powerful time where on the planet, in that sense, where wealth and spirituality are starting to come together. And I believe that more and more now, that the new rich or new wealthy are going to be people who are very spiritually aware. And my business mentor said that he just recently did a mastermind with a lot of, high multi-millionaire clients. And basically, he did a whole 2-hour session where all they did was clearing blockages, clearing things out of people's chakras, and out of their auric fields and other things to really free them up for more wealth. And people were giving amazing stories of the difference it was actually making. And I found out myself that since I started to actually do that and working with him and doing some more clearing on myself, the difference it's been making and accelerating my progress in business, attracting the kind of clients I want to work with, attracting more and more my dream life to me, just by really stepping in who I am and allowing this and clearing out blockages, many which are very deep within us. And one of the things that we have what's called third or fourth dimensional, like most of us are operating in the third dimension still, which not much really happens. That's like what we see around us. But the fourth, the fifth, the sixth and the higher dimensions is where magic happens. It's where you can clear things, where we can start to clear out, where we can start to actually get results. And even many psychology and counseling and what I call even normal mindset coaching we do is just operating in even fourth and low fifth dimensional. Yeah, as I've been getting into the higher stuff myself now and learning to do that and actually do that for my clients in higher dimensional clearing, I've been seeing some extraordinary results and extraordinary stories of seeing people who couldn't make things happen, starting to see changes in their life and starting to see shifts happen in their life and their business and everything else. So it's a very exciting time right now. So excusing all that interlude, but very important part of what I'm doing, because remember, this webinar was the 7 catastrophic mistakes that you make with your tax, but would stop you living your soul purpose. And taxes and living your purpose are critical, because if you're not doing one, contributing to a higher purpose because you're spending all your money on taxes and you're just not contributing to higher purposes and this planet, and then secondly, you are paying less taxes, you're not really building up much wealth and you'll be getting older and older without much to show for it, or not as much to show for it as you could have. Who resonates with what I'm saying here? Just give me a bit of a yes here. So just keep okay, so now let's go into more details on these mistakes. Let's start really going through this. So number one is you don't take action soon enough. So being a procrastinator will cost you faster than absolutely anything. So it'll cost you a fortune in tax faster than anything else. So that's the fastest way, not taking action soon enough. So it will cost you a fortune in tax faster than anything. So you do not want to be a procrastinator. Because as a business owner, you must take action, and you saw before, every year that you do can cost you severely. To give you an idea, I know with the 20 years I've shown you, that 5.2 million you would end up with after 20 years. So if you invest $100,000 over 20 years, you get 5.2 million. If you wait a year and then do it, you have 4.4 million. Totally serious. So rather than having 5.2 million, you have 4.4. It costs you $800,000 by procrastinating 1 year. Who's shocked by that? Just give me a yes, or just write I'm shocked if you're shocked by that. It cost you $800,000 just by procrastinating 1 year. Just say yes or I'm shocked if that's shocked you. Yeah, Alison shocked. Yes. Glenn shocked, and yes, Damien, Andrew, thank you. Look, it is. It shocks me. There's a very interesting book by a guy called Noel Whittaker, who is a financial planner, and he has this story called the $1 money train, and he goes through and shows what happens if you basically bank $1 a day from the time you're 19 until you're 65. And the amount you have, if you allow for just even a 5% interest growth, is some ridiculous amount of multi-millions. And for every year you wait, it's astonishing the difference it actually makes. For every year you hold off. And every year you hold off doing it means you've got to work all that much harder and invest all that much more to get the same result. So very, very important that you don't procrastinate and you take action. So here's another example. If you invest $100,000 for 20% growth, take a look at that. Your procrastination of waiting 1 year cost you $130,000 just because you decided to procrastinate. Again, who's shocked by that? It's pretty surprising, isn't it? And I've given this example already. In fact, I was wrong. I said $800,000. It's $950,000 by 1 year's procrastination. I said it was 800. I was wrong. It cost you $950,000. Yes, Christina, it is incredible, isn't it? So, okay, so procrastinating is the biggest mistake you can make. So mistake number 2 is choosing a cheap accountant. And now, I know this is going to sound like a plug or whatever else, but I kind of need to make this very, very clear on this one, because I'm a big believer in you get what you pay for. I don't myself get business mentors lightly for myself. In fact, I've gone through periods I haven't had one. Why? Because I haven't seen anybody that really grabs me. But generally when I've had one, I've paid a lot of money for them. Why? Because I do believe you get what you pay for, and I want to make sure I get the best. So I know that, for a very good example, what shocks me with my health, and because my kinesiologist Sahaj is on this, you know, I go and see her regularly for appointments, and seeing Sahaj, for example, I don't get Medicare back, whereas I'd get that from a doctor. And many clients I've actually told who've had health problems to go and see her, and they said, oh, we won't go because you don't get any Medicare back, and they basically keep their sickness. And I just shake my head, and it boggles my mind. And because they'd much rather say, look, I'll just, you know, stay sick, just take drugs and risk my health and all that kind of stuff, but actually go and get some really good results. So for me, with my health, I see people who I know are good, and if I pay for it, I pay for it. It's not a factor for me because I want to make sure I get the best health. And likewise, as a business coach, I want to make sure that I'm getting the best results. One thing that the wealthy know is they don't generally pick the cheapest people to work with. Now, in saying that, obviously, you know, it doesn't necessarily mean they're always going to be the most expensive, but there is some truth, you get what you pay for. I know myself that with my clothes, for example, I don't buy a lot of clothes, but what I do buy, I buy expensive and quality. I know that when I wear cotton or bamboo, I feel rich and I feel comfortable. If I buy cheap polyester or nylon or acrylic, I feel like crap. So I basically buy good quality to make me feel good. Even right now, sitting on this webinar, I'm dressed to kill. Why? You can't see me, but I know the universe can see me. I know that what I'm resonating out there is how I'm dressed, so I'm dressed magnificently here right now. I'm not sitting at home, you know, in a trackie on the couch. I'm actually dressed in good jeans, you know, polished shoes and a nice shirt, because I believe in projecting out there what I want to attract into my life. So like one of the things that my new business mentor's been teaching me is the universe, or God, however you want to put this, it's fine, does not reward the person, but rewards the action. And I'll say that again. The universe does not reward the person, but rewards the action that you do. So, for example, if you're a good person and going around with dreams for wealth to change people's lives and help homeless people, that's beautiful. But then your actions are you dress cheap, you buy cheap, you have a cheap accountant, you get a cheap business mentor, don't get one at all, you have a cheap mentality, and you think cheap, and you take actions inconsistent with wealth. Like you say, I'm going to be wealthy, and then you sit there all day, you tend to spend money and go out to the casino, you're always buying things, you've never got any money to show. Your actions are saying, no, 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 no. I'm not being congruent with what I'm saying. So your words are saying, yes, I'm this, your actions are saying the opposite. And one thing my business mentor said is there's a catastrophic effect by you not being consistent with your words and your actions not following them up. You're better off to be truthful and say, right now, I really have no money. I'm choosing to be cheap right now, but I am changing that in the next 3 months. But right now I'm doing this because at least if you're truthful, you're congruent with where you're at. If you're going around saying something different to what you're doing, you're actually sabotaging yourself in a major way, and because inside you know the truth. You know if you're lying to yourself. You know if you're going around saying that you're an abundant thinker and you're going to have $1 million residual income, and when you're not even investing and not even building a business and staying in a job, and you've got a cheap accountant and you're paying too much tax, your actions are showing, in the universe or God will go whatever, and just keep giving you in the fruit of what you're getting. So who's basically, if you resonate with what I'm saying, pick yes. So if that's really hitting home, just give me a yes. If you know what I'm saying, if you've really learned something from that, if that's kind of speaking to you. Yes. Thanks. Yep. Thanks, Brian, Glenn, Stephen, Lolita, Alison. Yep. Everyone. Sahar just says thanks, Brian. You're sweet. Yep. Very good. If you're in Perth and you really want to see the best kinesiologist in Perth, just let me know and I'll give you details. But yes. So great. So yes, pretty much everyone here. So okay. So choosing a cheap accountant. I notice actually Clive's here. Hi, Clive. How are you? Clive's a client, and also I've known Clive for years, a friend of mine, and he's basically came to me a couple of years ago, and he's actually on the webinar right now. I noticed. So he basically got hit with a very high tax bill from the tax office, and was quite comfortable me giving a testimonial. But to cut a long story short, he was about to go bankrupt, and we stopped his bankruptcy completely by getting out there, looking out of the box, looking at the way the law really worked and saying, well, hang on a sec. Clive's accountant had pretty much not been able to help him, nobody else, and I was able to completely get rid of his $395 grand tax bill and reduce it to nil. Yeah, hi Clive, how are you? Clive just typed in hi. So, yes, it was very, very good to help Clive actually, because Clive's a good guy. I've known him for years. He's got a good heart, and that was one of my more rewarding ones, because to actually save him from bankruptcy and actually see him get back on his feet and start to move ahead. So, yeah, Clive was $650,000. So yes, it ended up being pretty high, and we managed to pretty much get rid of it for him. So, very important. This is something that the rich know. Now, one thing people say to me is that, but I've already got an accountant. And one of the things that Donald Trump, of course, he has more than one accountant. I myself have a few experts. I have different mentors in my life. I don't have just one mentor. I've got my health mentor. I've got my investment mentor. I've got a guy in Adelaide I work with on investments. I've got my business mentor. I work with a couple of tax planning specialists myself who are more advanced than me to kind of keep myself on the ball. So, for example, you may have somebody who's your accountant and who does all your books a really good job, but somebody else who's your tax guru. And because often the person who's a surgeon, for example, is not the person who's a GP. So you might go see a GP who gives you a surgeon, and the surgeon fixes the bigger problem. So likewise, I have many clients who have I don't do tax returns. I don't do bookkeeping at all myself. My company does do it, but I don't do it. So some clients work with my company on the tax returns and bookkeeping, some don't. And then some come to me and work with me as a surgeon or high-level specialist to basically really, really make sure you're building freedom in your life and getting free from outrageous taxes. This is one of my favourite stories. One of my clients who knew Neville Coombs very well, who was Kerry Packer's tax advisor. This guy goes in because he had a $1 million problem and was desperate to fix it. So he went and saw Neville Coombs to fix it. And Neville Coombs took one look at it and said, well, I've got some good news and some bad news. And he goes, what's the good news? He said, I can fix your problem. And this guy had seen 3 different experts and they'd all told him you're stuck with this $1 million bill. He goes, are you serious? Now keep in mind, this is 30 years ago. And so he goes, you can fix it. What's the bad news then? He goes, I want a $20,000 check before I'll tell you the answer. And a guy calls and goes, well, okay, well, I have a 20 grand check on me. He goes, okay, I won't tell you the answer. But he said, but obviously you're going to have to come up with $1 million check or lose everything. So the guy said, give me an hour. He came back an hour later. He said, okay, I've got the 20 grand check. Gave it to him, and he told him the answer, and the guy walked away from $1 million completely free. So now keep in mind, 30 years ago, 20 grand would probably be like having $300,000-400,000 today for basically for 1 hour's advice pretty much. But that's how much they valued having a really good advisor. So one of my favorite little stories, and I know that another story is that, and this is one that's close to home, one of my family members used to work very closely with Alan Bond in business, and unfortunately didn't work out quite as well as they would like. And Alan Bond had this brilliant, he was a brilliant tax advisor that my family member used called Tony Oates, and he was a genius. And she said she paid hardly any tax or legally using Tony Oates. She mentioned it to Alan Bond. Next minute, Alan Bond had put him on a retainer, and she lost her tax advisor. And Tony Oates became Alan Bond's one. So having a cheap account is a big no-no. The third mistake is not having the right structure from the beginning. So it can cost you severely. Let's just take a look at a case study here. I have a client who purchased a property in Carafa before the boom happened. Property boom. They were excited when 2 years later they sold the property for a profit of 280 grand. There was one problem. They'd purchased the company in the wrong structure. It meant they paid twice as much capital gains tax as the 50% discount was not available. They effectively paid an extra $67,000 in tax. If you're horrified by that and going, oh my gosh, just say yes, or put OMG or put yes. So if that's like a no way, put OMG or yes. Yep, there's a couple coming through. Thanks, Leslie. Yep, so that literally one wrong structure can cost you severely. The rich have used companies to minimize tax for centuries. And companies are great because you pay 28.5% tax, you have limited liability, and you can kill off the company if you get in the tax or debt trouble. So companies are great structures. Problems with companies is they aren't good to buy and hold, and you lose the 50% capital gains tax at discount. So they aren't good to buy and hold because you lose the capital gains tax discount, and you have issues if you make payments for personal use out of a company. So I know you probably won't remember all I'm saying here. The point I'm making here is every structure, you've got to get the right structure for the right situation. That's the point I want you to take out of this. Mistake number 3 is people don't have the right structure for the right situation. As you can see here, you could pay tax as high as 78.5%. So let's say that you pull out some 50 grand for a boat purchase and you forget to have the right paperwork in place, you could end up with a $40,000 tax bill that you didn't budget on. So Kazim has actually asked, is it 50% in all states or just WA? All states, Kazim. So here's another case study, a client of mine, Brendan. I was going to personally pay $31,000 in tax for the 2012 year in my company. And again, I found out the way he was structured allowed him to do something that he wouldn't have been able to do if he'd been in a different structure. So what I did was I found something in the way he was set up, and I basically was able to turn his situation around and get him a $15,000 tax refund with one thing, a net turnaround of 46 grand for somewhere in the vicinity of about 10-15 grand of fees. So as you can imagine, he was extremely happy with the result. So that's companies. Trust is another structure. So the best way to understand trusts and to try and simplify this so you don't get confused, I love family trusts. A simple rule is if you've got a small business or a business just involving you and you're not going to bring in other people, you generally should be using a family trust as a rule. Not always, but as a rule. Because basically no one actually owns the trust income or assets. You are the trustee and you can choose at your discretion who owns it. So let me just kind of give you an example. I thought I had a case study here, but it seems to have been deleted by mistake. But let's just say that you have a trust and you've got let's say you run a business as a doctor and you've also got a trust which you do options trading, and you make a couple of $100,000 from options trading. You can actually save often as much as 50 to 75% tax because of the trust. You can split income between yourself, between your wife or your husband, a company, or the big thing is you can even do things where you can pay like charitable donations and pre-tax income. And I'm going to be covering that a bit later on one of the mistakes. So the point of I'm making of mistake number three, is not having the right structure for the right situation. Number 4 mistake people make is failing to restructure as your business grows. So you may have the right structure, but the main thing is to keep on top of it. But if you fail to restructure your business when it grows, you will probably end up paying far too much tax. So let's just take a look at a situation. So a common situation with clients is set up a company with individual shareholders to save costs, okay? So if you've done that, just give a yes. I won't give your name out, but if you set up a company for your business of individual shareholders, say yes, because I'll type in the chat box yes, because this can be a real killer, this one. The issue with this is any profit distributions from the company have to be paid to the individual shareholders. There is no ability to distribute profits. It would be far better to use a trust, which gives protection as well as tax minimization ability. Here's a really good example of a real-life case study for one of my clients. A chicken farmer client came to me who started their business 10 years earlier. It had gone way beyond their wildest dreams, like way beyond them. So they set up a company and the 3 of them owned shares in the company. It now had a building with a value increase of $2 million worth $3.5 million and a chicken farm worth $1.5 million, which is continuing to grow, and turnover a profit of $1.5 million. So they set it up just as a small business between the 3 of them and just got some shares. Over time, they purchased a building, they got a chicken farm. However, now they were going to sell the business, and here's where they hit a problem. Because of the way they were structured, they were going to be up for tax as high as $740,000 in the business and $980,000 on the property. Now, if they had been structured properly in the beginning, tax would have been a maximum of $370,000 on the business and $490,000 on the property, in some cases on the business as low as 10%, i.e. $150,000 and $200,000 respectively were even zero. So let's just put it another way. They were going to be up for tax of, say, about $1.7 million, okay, on the sale. If they'd been structured properly, their tax bill would be somewhere between $500,000 and $700,000, maybe $870,000. So 1.7 million, say, even compared to 700,000. Who thinks that's a pretty shocking mistake? It's a pretty catastrophic mistake. Just put down if paying $1 million extra tax on a business, it is a bit of a shock for you. Just click yes. Yep, yeses are flying thick and fast. Yes, thank you, Sahaj. It's a minefield. I'm glad there are people like you to make sense of it. It is a minefield. It's a bit like health. That's why I see you, because it can be a minefield working at all the supplements and reading all the stuff on the internet. So it's, yeah, Glenn wrote off the bridge. Yeah, it's a good way of putting it. It's just nuts. And personally, more and more, I used to always kind of never really speak this directly on stuff, but I know now, I feel like with my tax planning, I'm like the guy standing on the road knowing that 200 meters behind me the bridge is out. And basically, if I don't stop you from driving, you're going to keep driving and you're going to go into the water and die. Likewise, if I had the cure for cancer, and if I didn't run around telling you about it or really going, yeah, I've got it, I would be, I'd be negligent. And likewise here with taxes, if I'd be negligent if I'm not pushing really hard to say to you, you need to absolutely do something about this right now. You need to get onto this, because if you don't deal with this, it's going to cost you severely. And I can tell you now, but think of it like car insurance. I mean, is there anybody here who expects to crash their car next week? Type yes if you are fully expecting to crash your car next week. That's obviously a bit tongue-in-cheek. Point is obviously not. Yet how many of you have got car insurance? I think most of you, or just all of you, if you've got cars, would say yes. Why? Because you expect to crash your car? Certainly not. Because you know that if you do happen to crash your car, which is a possibility, and it does happen, because shit happens you don't expect, excuse the French, you can end up paying a lot of money on a car you finance or something else, which basically you didn't plan on. So hence you get insurance. And likewise, let's just say no one here is expecting to obviously run into problems with their taxes or business or anything else. But the fact is, let's say the tax office does come after your business, and it's happening more and more frequently since they've announced their zero tolerance policy on small businesses falling behind and garnishing their bank accounts, which means freezing bank accounts or taking money out of it before people know what's happening. So garnishing your bank account. Let's just say with the tax office, but they're doing that to you, and you could be structured properly to avoid that happening to you. If you're not structured, the effects are catastrophic. You will literally end up suddenly losing a business. You will end up losing your hard work. You'll end up losing your branding, your goodwill you built up. You will lose your clients. This happened to me. I actually lost a business some years ago, and it was horrible. And I was fortunate in that I was very well structured, which made the after effects about 20% of what it could have been, but still I lost certain things and had a great fallout because certain things weren't done as they could have been done. And it was one of the worst periods of my life. And whereas the one thing that made it easier was I was well structured and enabled me to pick myself up again. So think of it like insurance. I've got a client right now who's a business about to boom. His business is set up in a company. It's completely evident to me he needs to have a company to run his business, a trust to hold his IP, and he's paying far too much tax if he starts making money in future because he's got individual shareholders. If he does it now, there will be no tax issues. If he does it later, when he has money, he will pay significantly more tax. We just actually saw him only some days ago, and it works out that I was telling him he's about to boom. He's about to get a big deal in the next 6 months, quite possibly. I said, if you restructure this when you get the big deal, guess what? You'll be up for a lot of tax. And this happened to me with a client 6 months ago. But I told them to structure themselves quick smart while they weren't making money. And they said, well, yeah, it's going to cost me 20 odd grand. I just don't want to spend the money now, 10, 20 grand. They ummed 2 months later, they came back to talk to me because suddenly they had $10 million come in unexpectedly. I said, well, now it's going to cost you $1 million in taxes to do this. And of course, that was like a horrible shock for them, which could have been easily avoided by structuring themselves correctly. Think of it as a cost of business. It's just like starting a business, paying license fees, it's a cost of business to make sure tax planning is all in order. Mistake number 5 is not using a family trust when you can. I've mentioned that they're great to split income, and as a rule, you're better off to use them to run your business. I've mentioned they've been around since medieval times. There's some great opportunities to split income, and on top of that also you can control and not own the assets, which is great for protecting your wealth. So I've got a case study here, so yes, I do have one here. So have a read of this one. Donald and Daisy have 3 kids. Daisy runs a finance broking company with a turnover of 1 million. She's making a 200k income from the business. Donald works part-time on 30k, decides to trade options, and they make 100k and give 10k away to their church. Now, if the account was in Daisy's name, they pay 48.5, in Donald's name 35,805. In a trust, they can actually give to their church out of pre-tax income, something they cannot do in a company, something they cannot do in Daisy's name, something they cannot do in Donald's name. So they pay a maximum tax of $27,500 and may reduce it even further with the kids. Keep in mind, saving an extra 8 to 10 grand a year in tax from that one thing alone, over 80 years, you're talking about 100,000 with compounding growth, $200,000. So these little things add up and putting that money aside. A very real case study that happened last year with me with a client, earning $1 million per year income from doing investments, donating $300,000 to charities. $150,000 was made to unregistered charities, which normally would not be a tax deduction. By setting up a charity for the client and using a family trust, we were able to save $69,750 in tax. If you think that's awesome, just give me a yes if you love that. So, yep, there's plenty of yeses. Some have asked me as to how much longer it's going. We're through number 5. We've only got a couple more mistakes to go, and then we're going to be closing and and showing you how we can work with you moving forward. So I'm actually having some questions come through. Can we work with you on this? And I'm saying, yep, we'll be going through that. I had another client who made $1.82 million from options trading in 2 months. 6 months earlier, I sat with him and told him to set up a family trust with a charity distribution clause and a bucket company. He didn't get round to it. As a result, he paid an extra $46,500 tax on the 100 grand church gift and potentially a headache of Division 7A compliance. So he ended up effectively paying over $100,000 in taxes he wouldn't have had to pay otherwise. So I'm sure he can imagine he was a pretty unhappy guy. Okay, mistake number 6 is not using superannuation in your late 40s or 50s. So when you're in your late 40s or 50s and you don't have super, then the only guarantee you'll have is you'll pay far too much tax. And this is one I can tell you now, absolutely, if you're in your 40s, this can cost you severely. And you've already seen the compounding calculation of paying 15% tax compared to, say, 30 or 48.5. You can end up with twice as much over 20 years as otherwise. So if you're in your 40s and you don't have super, you really want to be looking at having your 40s. You really want to be doing that. So, yes, I've been asked about individual intro consults. I will be getting on that very shortly. So, okay, so superannuation, you pay 15% tax before age 60, 0% tax after 60. So just reiterating that, 15% tax before 60, 0% tax after 60. You can withdraw your money out of the fund completely tax-free, like a tax-free pension. So super is great to accumulate long-term assets. You can do lots of super. So once again, 15% tax before 60, 0% after 60. So you can have 2 ways to have superannuation. One is you can have a self-managed fund, you can have a super managed account, or you can have a self-managed fund. So you can invest in your supers through BT, AMP, or just simply set up a self-managed superannuation fund. A very good example for me here, a client who came to me only about 6 months ago. He had $1 million in cash and shares, 6 properties, and only 40 grand in superannuation. In her own words, she didn't believe in it. All of it was in her name or in her company of trust. What this meant for her is that once she hits age 60 and wanted to retire and draw out cash, she'd pay full marginal tax rates. Yet properly planned, she'd have been paying no tax at all on her income from her properties. When I told her this, she was horrified. And as you can guess, suddenly a super fund's been set up and we're moving money into super really fast. But the problem is you have contribution limits. You can only give 180 grand every year or 35 grand tax deductible. So you can't put it in quite fast enough if you want to build a really big balance, if you leave it too late. So you really want to be putting your money into super sooner rather than later. So there's a classic example where she would be paying full tax. Imagine the cost for her. She'd be paying something like, so let's say that she makes 100 grand residual income. The difference between paying $30,000 a year or zero. So having 70 grand or having 100 grand in her pocket. Who thinks it's pretty insane? Who kind of can see how insane that is to not use super if you're in your 40s or 50s? Say yes if that's kind of really made you see you need to take some action. Just give me a yes. Yep, there's quite a few yeses coming through. Yes, so really huge difference. So let's just say that she left it as it is and made 15% growth. She paid tax at normal rates on $150,000, which is about $40,000. If she could move the $1 million cash and shares in the super, any earnings are tax-free. The cost of not taking action is $40,000 every single year. Over 10 years, it's $400,000. When compounded growth, well, it's going to be a lot higher depending, but probably around about 800, 900,000 to $1 million will be the cost of not taking action right now. Who can see that's a pretty significant cost by not doing something about this? Say yes if you kind of are going, whoa. So really, taking action. It's one of the reasons I'm spending a lot of money right now with my business mentor, because I realize that, yes, it's cost me more than I planned to spend. But it's also, I knew it would cost me far more by not taking action. The difference between a successful person and someone who's not is they look at the overall costs. So a very good example, the reason why I went on a gallbladder fast was, yes, it was painful going on a gallbladder fast and having to still have from time to time gallbladder spasms in my body and having pain and having to go through eating and not eating for 10 days and having this awful, disgusting lemon juice, olive oil and Epsom salts. But the longer term cost without a gallbladder was everyone I've spoken who've had it happen had side effects and had that. So as I saw it, no gallbladder, long term, absolutely, catastrophic effects for me, long term. Having a gallbladder intact, yes, short term cost. So yes, short term, getting good tax planning advice and working with an expert who knows what they're doing, oh yeah, it'll hit your hip pocket and it will hurt. Longer term, in the short term, longer term, it will give you a lot more money and accelerate your wealth. One of the things I absolutely do these days, I'm more than just a tax planner now. I really have been helping clients accelerate their wealth creation growth and their businesses and turning their businesses around. Because I've learnt many strategies to grow my business and even saving and investment plans, and I'm very heavy on that, I spend a lot of time talking to clients around that as well, so turning their tax savings into real results. And quite a lot of my clients now who I'm working with are not just tax planning, but they're actual business and financial growth kind of mentoring to help them really be accountable. I do this myself because, as I see it, Roger Federer, Novak Djokovic, Rafael Nadal, brilliant tennis players and all pay coaches. Why? Because they know full well that without a coach that they're going to get slack. They'll take their eye off the ball. The coaches see things and help them keep at the top of their game. Likewise, I want to keep at the top of my game, and that's likewise where you want to be. So wanting to go offshore, but put off by the media. Very good book to read, The Sovereign Individual by Rees, Moggs and Davidson, who predicted in 1995 more and more people would go offshore. And those of you who put down, who read my second email on the Roman Empire? Who remembers my second email sent out on the Roman Empire and the true story of what happened there? Just give me a yes if you actually read that email. Oh, good, a lot of people. Yep. Yeah, that's basically, that story came from the Sovereign Individual, from Rees, Moggs and Davidson. And that's exactly what really happened. And we're following the same path. History is repeating itself. The government even just the other week have announced a further crackdown called the Financial Crime Task Force to try and on offshore. Why? Because they're realizing that the governments are running out of money, folks. That's what's happening. They're running out of money. There's less, they've got an aging population. More people, more government workers, more regulators being set up than ever before, all wanting to be paid, all wanting to live off your income and your produce. And there's less and less people to provide because the big end of town are going offshore. The big companies are setting up offshore. Apple paid 4% tax last year. Google paid 1% from Australia. eBay paid 2 or 3%. Most multimillionaires pay 10, 15%. Why? Because they know how to do this. And the government know this, so they're slamming the middle class harder. And the truth is, if you stay in the rat race, who's read Robert Kiyosaki's Rich Dad, Poor Dad? Who's read that? Because if you stay in, give me a yes, because if you stay in the rat race, I can tell you what, you will not be able to really get ahead. And Robert Kiyosaki specifically says you must have a good tax advisor and minimize your tax, because otherwise your quest to freedom is going to be stifled. You've got to have a financial abundance and saving and wealth growth kind of plan in what you're doing. You need to be one step ahead. You need to be understanding that there's a new world order, there's a global currency, there's a global crash coming economically that's going to smash and dwarf anything you've ever seen. Everyone's saying it. Robert Kiyosaki's book, Second Chance, in 2016. He said there's going to be a crash that will dwarf the Great Depression. Yes, they're slamming the pensioners. Hugh, I agree. They're going after everyone because there's a big crash happening. There's going to be a monetary collapse, an investment collapse, and if you're not prepared, you're going to be stung. We have got a new form of industrial age, changing the information age. Businesses are shutting left, right, and centre. Clients I speak to said, you've got no idea of the pain that's out there. So you need to be part of this new rich. You need to be part of learning business online. You need to be part of globalizing yourself and getting yourself out of the rat race and being courageous enough to take that step into your freedom and really breaking your dependence. I said to my kids recently, I've got kids aged between 10 and 14, and this is how I described it. This is going to be absolutely very blunt and quite hard-hitting, but just I trust by now you're going to hear my heart. I told my kids, I said, please, I said, do not ever get a job. Do not go and get yourself a job. I said, unless that job is part of your training to start your business, because I said getting a job is like moving on to drug addiction. Once you start taking the drug, it's very hard. Once you get addicted to a paycheck, that addiction becomes like cocaine, like marijuana. It's something, but it's a hard addiction to break and go cold turkey. And Robert Kiyosaki in Rich Dad Poor Dad, that's the exact word his rich dad said to him as well. He said to Robert Kiyosaki, he refused to pay him in his first job in a supermarket, saying, if you get a paycheck, you will stay addicted. And Robert Kiyosaki, after many weeks, worked out a way to start a business from his dad's supermarket and make money. The point I'm making is, if you're in a job, you're already on drugs. And that's a very strong thing to say, I know, and if you're offended, please forgive me, but I'm really coming from the heart of wanting to help you see something here. Is that when you're in a job, to some degree you are on drugs, which means you are dependent upon someone else to be your supplier. If that supplier decides to up the prices, like put the taxes up, or cut down, or crash the monetary system, or cancel your currency, which they did in Germany in 1923, which right now our currencies are being devalued like never before. China and countries, and I don't have time to go into this, but I'll be doing a further webinar on this, but countries like China, Japan, everywhere in Europe, they're devaluing their currencies left, right and centre because they want to cheapen their debt repayments. So in simple terms, I can't explain why that is, but if you look at what's happening now, currencies are being devalued deliberately. They're crashing their currencies to cheapen the debt repayments. It means your money in the bank, every month you hold it in the bank, you are losing money. It is going down in value. That's what's happening to you. Having a job, a wage, your money is going down. You're dependent and you're at the mercy of your employer. You're at the mercy of your government, and you're so effectively you're at the mercy of your supplier. So that's why I'm saying to people in that you absolutely want to start to do that. And this is what I told my kids. You guys want to do that. I want you guys to feel the pain if you're financially got no money and you're struggling, like my 14-year-old William wanted to get a job. And I told him at Woolworths, I said, William, you do that and you started drugs. And I said, that money becomes an addiction. I said, go through the pain, son. I said, feel the pain of having no money right now. And I said, and get your creative brain thinking. Tell me, how can you make some money? And now his brain's starting to work. Like the boy can do card tricks, and he's actually done a few card tricks now, going to tables at restaurants and asking them for doing a card trick and been asking them for a donation and making some money. And he made 25 bucks the other week and was pretty excited. And I'm saying to him, you can do a magic show where you can call yourself William the Great, get yourself a top hat, dress up as a magician. I said, a 14-year-old kid, I said, will be a novelty, and he's a real showman. I said, go into the middle of Fremantle, we'll see if the council will give a special concession for a child, and just like that, you can become a magician. So then I said, then you can set up your own YouTube channel, and I said, and you can kind of give yourself a bit of fame or prestige, and now he's getting excited. And so you see, Who loves this? Who's really getting something out of this? Just give me a yes. Say yes, or just say I'm getting turned on. Say yes, or love it, or just put I'm getting turned on, or I'm getting hot and heavy, or yeah, baby. Turned on, yeah, Glenn's turned on. I love it. You got to have fun, everyone. And I mean, the problem is when you're trapped in a wage slave job and when you're paying high taxes, life isn't fun. It's like when you're a kid and you got no responsibility. I watch my kids. They just love life. They have fun. They just enjoy themselves. They get out and just do stuff. Lately these days, I am just having fun. In America, I just had fun. I just get out there, I work my ass off when it's time to work, and I have fun when I have fun. I'm doing all kinds of bucket lists. I'm ticking things off. I'm going to weird places. I'm just going there just to do things. So this is what it's about. This webinar is about freedom, everyone. It's not just about taxes. It's about freedom. And one of the reasons I love offshore and working with so many people, I have one of my clients right now, we've got them offshore. They told me they've gone from doing nearly 2 days a week in paperwork to almost none. They've reduced to almost 0% tax. They're living in Thailand. They are making the same income and more now because they've got more time to focus on their business and make more money. They just travel the world and have fun now. They have so much fun. So going offshore, if you really want to look at that, and if you're kind of the person that you're ready to move offshore and actually set your own business up or go online or set up an online company and do that or take those steps or even start learning about it, learn about it. There's a global market there. I'm actually myself, one of the things my business mentors told me, he wants me to go more global. I'm about to start doing global webinars on offshore and tax planning and not focus on Australia as much because it's a big market. It even gives me the option when I turn 50 in some years' time to go to Thailand. There's a special visa in Thailand for over 50s where you can live there, you can become a resident of Thailand, very minimal cost, and you can become a permanent resident, pay no tax by being properly structured, and have a residency. So you can basically live a tax-free life. You can still come back to Australia regularly, but live a tax-free life. Who finds that sexy, what I just said there? That's the kind of possibilities you can get when you get your freedom, folks. Say yes. If that gets you turned on, give me a yes. Because you should be. I'm starting to get turned on by it. Yeah, I'm getting a few yeses. I love it. I'm glad everyone's being so interactive here. So I have a client with a successful online business for business partners. Yeah, it's sexy. I love it, Damien. The business was making a net profit of 1.5 million a year with income tax of 450,000 plus GST. They wanted to start in the UK as they saw getting ahead in Australia is difficult. Their plan was to wind down their Australian business and focus mainly on the international market with a greater market share. So we structured the business by setting up a Hong Kong company to run the business, a Seychelles company to own the international IP rights and license agreements between them. The Australian business continued to run through an Australian company paying tax as normal. The effect was the estimated 1 million UK profit was only going to cost $50,000 rather than the originally anticipated $300,000. So basically, they're suddenly now earning a $1 million UK profit at only $50,000 tax, all legally set up, rather than paying $300,000 to $400,000 of tax. That's pretty sexy. One thing I also just want to quickly mention just to clarify on the example before with residency in Thailand, and that, for example, you have a 50s visa, but it's also available in Panama, Costa Rica, many places. And there's Malaysia, there's all kinds of places where you've got retirees kind of, or people that are moving that way who are encouraged to go there to work, to live yourself over there and become non-residents. Okay. Excuse me. So another client who ran a coaching business online in social media, they decided they wanted to move offshore, $3 million net profit, paying $873,000 tax, working long hours, bit of restructuring, using a mixture of Singapore, Malta, Gibraltar, Cook Islands. We reduced their tax to 1%, they're now living overseas through a mixture of Singapore and Thailand, paying $30,000 tax. That's a $843,000 tax saving, plus we cut 1 day per week off their paperwork now to give them more time with their families and to have fun. Who's liking this webinar at the moment? Yes. Okay, so now I'm going to start, before I just start to close off, I'm just going to answer some of the questions, and feel free to give me some more. I've been asked, does this apply to New Zealand? Answer is yes. Not completely. There's some differences, but some of the principles do apply in New Zealand, absolutely. And I've been asked about a cost-effective way to go offshore. Yes, offshore is more expensive, but obviously it's the, again, pay now, gain later. That's how I see that. I've been asked, sole trader, I'm a sole trader now. Is that a really bad structure? Well, it's a terrible structure, because as a sole trader, if you get sued or the tax office comes after you, you'll be liable for all the debt, and your credit rating will be ruined when they bankrupt you, and they will bankrupt you if you basically do that. I've also, Bruce has asked about 600,000 plus negative gearing amount trapped in a family trust structure. Yep, look, there's, again, you can always look at things, Bruce. And I'm asked here about the super. Is that really true that you can pretty much set up a self-managed fund 50 now and pay only 15% tax? Absolutely you can, no problem. Again, just making sure that you can actually invest the money and make the contributions, but absolutely correct, yes. So I'm asked, can I do a family trust tax return myself? By Ronnie, yes you can, but it's difficult. I don't even do my own myself. I have my own accountant. Leo says, are you talking about moving offshore physically, or does it apply to still living in Australia? Look, Leo, you can go offshore living in Australia for asset protection. For tax minimisation, very limited, like very, very limited. The government are breathing fire down that right now. So read the Roman Empire's email again, number 2. That's pretty much where it's at. The government are breathing fire around people trying to move money out of Rome who are staying in Rome. So kind of see it like that. So in some ways it are, but I pretty much say to people, if you're going to live in Australia, very limited what you can do. I say see offshore more as asset protection. There are things you can do, but it's very, very limited. You've got to be very careful. I know myself, I stay strictly within the law for people living in Australia, and of course I do offshore, but with offshore there's a lot more you can do. Stephen said, keen, doing a feasibility study on going offshore, keen to know what amount of tax saving would justify. Oh look, yeah, I mean, basically I think you apply it year by year, Stephen, so if you basically are saving 40 grand tax a year, sure you might pay that in the first year or pretty close to it, but then every other year after that you'll be effectively getting free cash flow. Okay, so what I'm going to do now is you can keep giving questions through, and I'll keep answering questions as we come through, but I'm just going to start though for those who now want to work with me as I'm closing off now. So for those who want to work with me, so obviously taking action. So who here basically now knows you've got to, give me a yes if you know you've got to take some action. Give me a yes of some kind. I'm not saying do anything with me today. I'm saying who knows you've got to take some action right now. Yep, it's coming through. Great. Plenty of yeses. Thanks, Clive, Christine, Gazim, Leo, Alison, Felicity, Peter, Glenn. Felicity says we're on drugs and need to get off. Yes, you are. And if you know you've got to take action to get out of the rat race and really minimise your tax. I love how Robert Kiyosaki says that once you go into business or anything, you earn the right to basically minimise your tax. It's like a reward given to people who do that. So really big opportunity to do that if you haven't. Time to do that. One thing I've loved is that successfully I've helped many of my clients actually leave the rat race and start their businesses because I did it myself. I grew up in a very traditional family, went to uni, did degrees, had a job and made myself. I really had to go cold turkey because I was completely addicted to drugs and the paycheck. So choices you have. Number 1, figure it out yourself. I don't advise it, but it's definitely an option that you have. For me, it's a bit like going and actually working out my health myself. I do a lot of research online, and I know Sahaja would say I'm a lot more educated than most probably people who see her, but I still go and I see an expert because I know they keep on top of their game and they're always ahead of the game in the newest developments of health. So it would cost me far more in time and money and ultimately not getting results or getting it wrong. A good example was a few years ago I was suffering some hair loss and I did research online. I tried stuff from online, it wasn't working. I went and sourced a Haja and also someone else. They immediately told me what I had to do, and in no time at all, my hair was absolutely great. So, figure it out yourself. One is go back to your normal accountant and just see them and do it. And I'd say this to you, look, if you're a normal accountant, that's fine if you want to do that, and if going to a cheap accountant is for you, that's great. You know, if that's right for you, and I honour you for being honest. The main thing I want you to do today is make a choice, accept the consequences of your choice, and being honest. Is that fair? Whichever way that goes for you. So really today, the outcome I want is that you make your choice and you accept the consequences of your choice, whichever way that is. So option 2 is go to your normal accountant. They haven't helped you to date, but yes, they may help you, and the truth is in some cases you may have an accountant you're happy with. And the truth is the main thing is to make a choice and be happy with it. The third one is to join the ranks of the financially independent and elite like Kerry Packer and work with an expert, someone like me as of now. So that's your choices. Figure it out yourself, go back to your normal accountant or work with an expert. Okay, here's the facts. On average, 20% of people who are really working their ass off in businesses and doing that become financially independent. They call it the 80-20 of people who are really serious. And a further 4% of these who become financially free become actually financially independent. So financially free means having some residual income coming in to cover their wage. Financially independent means having assets, but pretty much means they'll never work again. So the question is, which one do you want to be? The fact is, less than 5% of people take action from webinars. That's the basic rule. So the 100 or so people, only 5% will take action and do something about it. So which one are you? So my question is, which one are you? Are you the person taking action? I like this picture, it was one of my favourite little ones. Or are you this person? Which means bury your head in the sand. So really I'm going to ask you, and just give me a yes, who's really serious about being financially independent? And again, it's perfectly okay to not say yes on this one, because for you, some people say, look, money is not important to me. You know, I just want to enjoy life, enjoy my family. And my mum would say that to me. My mum and dad, great people, love my parents. They would openly say, well, no, it's, you know, it'd be nice, but it's not for us. And I honour them for their choice. So yes, there's a few yeses coming through. Who else really wants to be financially independent or even financially free? Yep, Glenn consumes a large part of my thinking. Yep, Leo, yep. Great, okay. So, questions about being committed to the ranks of the financial elite and slashing your tax legally using the right gurus. So, what I like to do is do a bit of a sheep and goat. So, this gives you a bit of an idea if I can help you or not. So this is a good kind of gauge for you to say, yep, Warren, you can help me, or no, you can't. So this way, you don't waste your time and I don't waste mine. I can show you. So the people I can help, this category 1 is you just want the best. So you're absolutely serious about belonging to the 4%. You know these people use the best advisors and you'll do the same. You love the story about Kerry Packer and you want to do the same and go to the next level. For you, you won't even hesitate to pay 20 grand to say 50 grand tax in a heartbeat, or get 50 grand of results in income or whatever, provided it's 100% legal. If that's you, just say yes if you're in that category. So that's if you're in that one. So, yep, there's a few yeses coming through here, great. Yep, that's him, yep, Warren, yep, great. 2, you're a business owner with tax debt and it keeps you awake at night. So you're freaking out, you're staying awake at night stressing, you're working insane hours, you just want to get rid of it as you and your family have nothing to show for your hard work, and that really hurts. If that's you, give me a yes, because these are people I really want to help. Yep. Category 3, you're ready to go offshore. You're fed up with the amount of tax and you'll gladly move offshore if you have to. You know, getting ahead in Australia is like playing football with a 10-kilogram backpack on your shoulders. You know that the reason why Singaporean and Hong Kong investors have got so much money to burn in cash like you wouldn't believe is their low tax rates help them build wealth faster. It excites you to keep more of what you make. If that's you, Just give me, don't give me a yes, just give me an OS. Just put OS, which means you want to go offshore. So if you're actually in a state where you really want to go offshore and you're willing to do it, then put an OS. Yep, there's a few coming through here. Okay, category 4, your business owner paying far too much tax and want to restructure now. So you've heard me today and you go, wow, you know, I realise the cost of not restructuring is so painful, I'm not delaying anymore. I just want to ensure I'm properly structured and I get it right moving forward. And I'm that serious, I'll borrow from my pension grandma if I have to. Now I'm being a little bit cheeky there, but that goes back to an analogy I once was given where I remember once a mentor once told me, you know when you're serious about doing something when you said you'll borrow from your grandma if you have to. In other words, you're that serious. So if that's you, just basically put grandma. If that's you, if you really know you need to restructure your business and affairs, just type grandma or GM. Yep, Martin, a couple of people. If you know that you'll do that just to get things right. Glenn said, sorry, Granny. Okay. And the fifth one, and the last one here, of who I can help, is you're in your late 40s or 50s and done absolutely nothing about super. So today's giving you the fright of your life. So nobody ever told you this before, what I've just told you. You were like, holy Moses, you know, I'm going to pay a huge amount of tax. So you're like, right, I'm ready to do something about my super. So if you're in that late 40s or 50s, or mid 40s even, and you've done nothing about super, and you're like, I'm doing something, just give me a super. Just type super. Yep, there's a few coming through. Yeah, this is a bit of a doozy, this one, a super. There's a few. I mean, it shocks me just how much, you know. Okay, now the people that I can't help, because there are people I can't help. So category 1, the fact is you just don't have a lot of money. You know, you've heard the presentation and think it'll work for you one day when you have some money, but you're not ready just yet. And if that's you, thank you for your honesty. And please go to my WealthSafe website, watch some of my webinars. They're free. You know, I've got some free recordings of some of my webinars there. The fact you stayed on, you will get my free gift of my Intelligent Trust Guide. And thank you. You know, I'll again say thank you for your honesty and for being here. I hope you've got something from it, and maybe we'll work together in the future. Category 2, you prefer a cheap accountant and would rather save your money. So you're like, look, I don't like spending money, and although I know it will cost in the long run, you think, look, in principle, I'd rather a cheap accountant. You know, I'd rather pay $1,000 to just get my books done. I don't really want to pay big money for that. It's just out of my, you know, ball league. So that's just too expensive for you. And if that's the case and you're like, you know what, I'm just going to stick with my cheap accountant because that works for me right now, again, thank you for your honesty. I'm a big believer in being honest in where you're at. One of my friends once told me you can lie to everyone else if you really want to, but never lie to yourself. So that's what I want you to do today. The third one is you're a people pleaser. And this is actually one of the most common ones I actually face. You know Donald Trump has many accountants, but in the day you just don't want to offend your accountant. He's been your accountant for years. Your family would kill you and be most upset if you got someone else involved. And your wife or husband with a total freak out. You really don't want to rock the boat. So you're like, yep, you know, I've weighed it up, and yep, I know that working with a good accountant and financial expert will help me get financially ahead. I'll start getting out of the rat race, but on the other hand, the cost will be too high, because the costs will be, I'll upset my wife or my husband, I'll upset my accountant and my family, and that's not worth it. I'd rather be broke and poor and have a happy family and wife. If that's you, again, thank you for your honesty. And the truth is many people are like that. So if you know that that's what's important to you, be honest. So yeah, Felicity, I know I have to break up. So if you've got to break up with your accountant and break up your relationship, then yeah. In some cases you may still work with him. And you know, if they're the right kind of person, and then have two accountants like Donald Trump. The fourth one is you're a procrastinator. You came to the webinar, and the truth is, if you're really honest for an endorphin rush, you're a webinar junkie. You love webinars. If there's a webinar, you just go to it. You'll be on every webinar. You lap it up. But when it comes to actually taking action, it scares the crap out of you. You're a perpetual dreamer. You feel more confident in your imaginary wishful world. You're kind of the person who daydream about building wealth. You're always telling people what you're going to do, but you never actually do anything because when push comes to shove, it frightens you. You have inner guilt maybe from religious upbringing, or taking the action to work frightens you. You just don't want to act now. You're just like, you know what, that's not what I've come for. And again, if that's you, I would say face it, accept it. Say, I'm just here for an endorphin rush. Or you might even today might be your wake-up call. It may be your healing. It may be your moment when you have a painful realization that that's been you. If it's have been you, and I won't name you and other people can't see it, and you know that actually has been you category 4 and you're ready to change, give me a yes. Because category 4s who are willing to change, we can help. So if you know you're category 4 and you want to come clean, just give me a yes. I won't name you at all. Yep, I've actually had a couple of people. Thank you for your honesty. I do appreciate that. Because if you do that, this can be your day of salvation, so to speak. This can be the day when you really do change. Okay, so what I'm doing is an application to work with me. And the best way I've found this working really well is I'm giving you, it only will take about 5 to 10 minutes of your time, but this is the fastest way for me. So rather than offering you something and charging you a fee, this is a no risk for you, no risk for me, because I don't want to charge you 1 cent unless I know I can help you. Simple as that. So I'm going to give you the link right now in the chat box, and I'll explain in a minute. But I'm working with a limited, so the link's now in the chat box. I'm working with a limited number of people. So what I do is I limit now. I've changed my business model. I have my accounting firm. A lot of my clients are looked after by my team, but I'm working with a limited number of people to help legally establish their tax, who are quick about getting results, and I want very specific kind of clients. I want people who are really keen about freedom. You're not just about tax minimization, you're about freedom. You're about really looking at going offshore or living in Australia and actually minimizing your tax and getting a business really taking off or whatever, but really breaking free from the drug addiction. So I guarantee, my rule is that I look to save you more, guarantee to save you more than I charge you, which is why I do the application. So you got the application link there for you to click on. I'm not for everyone, I'm after a small group. I only work with generally maximum of 20, often less at a time, depending what's happening. So you're going to be someone willing to go to the next level. You like being held accountable and someone being straight with you, tells you the truth. I mean, I love that myself, but you got to enjoy that. You want to work with me one-on-one right now. You have a track record of success. You're highly motivated and self-starter and fun to be around. I'm in the privileged position. I don't have to work with people I don't like. So I want to work with people who are actually fun and serious about doing something. It's by application only. So in other words, working with me is by application. You complete the application. Then what I do is I read the application. Now, if I believe I can help you, I will personally call you and have a chat to you. And there will be no cost, no obligation for that chat. And I will contact you. I will get you on Skype or Facebook, have a quick chat with you, probably initially just by chat, and then a quick one on my phone, and just see if I can really help you and make sure what I actually can. Because if I can't help you, there's really no point. If I can't help you, I may still be able to get you to talk to one of my team or my accounting firm to take care of your tax returns or whatever else. But we both need to be happy we can work together. Generally, about less than 10% of people who actually apply, I actually can help. That's a pretty good rule. So my selection criteria is simple. I want to know I absolutely can help you smash it. So I take one look and go, I can help you. I can help you get rid of your business tax debt and give you back your life. I can help you minimize your tax in your business. I can help you go offshore. I can really get you serious results. So I can add you massive value to your life. I can see you're motivated and have a record of success. I can see you're fun to hang out with. And to be honest, your situation is just plain sexy and interesting and you got my attention. If I can't help you, that's okay. But complete the application, and like I said, we've got the gift for you, free of charge, and as a special gift in the best way to get you help. So we do have ways. If you fill the application out, we will get back in contact with you one way or the other and make sure we can help you. Even if I can't help you, we may be able to point you in the right direction. The point is, I want everyone who's come here who applies to get value. Anyone who's serious, I can't help everyone, but those I can't help, I want to be able to give you a gift or give you some information or something to help you in your journey, because I do believe in giving there. And those who I can work with, I want to really work with you and make a difference in your life. So there's a link again. So, okay, I've still got some more questions coming through. Yep, so asking me, so can you help me with US tax returns? Yep, look, we can do that. There's a more specific thing I do. Someone's saying, can you help me, Warren, with a restructure of my business? Yes, I can do that, Greg. I can help you with restructuring your business. And do me a favor, if you're going to be applying, just give me a yes. If you've already decided I'm definitely applying, just give me a yes. So, yep, yes, thank you, Damien. Yep, thanks, Greg. Yep, thanks, Eric. Yep, thanks, Felicity. Thanks, Ronnie. Thanks, Clive. Yep. Thanks, Kazim. Yep. So, yep, just give me a yes if you're going to be applying. Glenn's already working with you, but yes, I'm sure I can do more with you, Glenn, and really make things happen. So just, yep, true. So yep, people are asking, you know, can this actually help me? Like, can I set myself up in my business? Can you actually help me to minimize my tax right now in Australia with the way I'm structured? Look, the answer is very simple. The answer is, look, if you're structured a certain way in your business right now, in a company or trust or whatever, but haven't really had it looked at properly, then definitely put in an application and we'll and see if we can help you. So definitely definitely the answer is yes. Like, you've seen the case studies and seen the examples. If you're basically making money from your business, or you're doing options trading or anything of that kind, or if you've got super or anything of that kind, well, you haven't got money in super and you're in your 40s or 50s, then yes, I can do that. So the truth is, if you're in business in any way, or if you're in a high income and wanting to move into business and you're on that way, I can help you. And we can certainly give you a hand. So yes, if you're wanting to move offshore, or you're already on the path of moving offshore, or if you're really wanting to minimize your tax in your business, and you're sick of how much tax you're paying, then definitely put an application. If you really feel like you're paying too much and you're frustrated because you believe it can be better, nothing to lose. Like I said, if I don't believe I can help you, I'll tell you straight away. Okay. Any more questions here? So yes, once you've completed the form, we can definitely assist you. Yep. Yep, great. Thanks. Yes, Martin. Yes, John. So a few more yeses coming through. So yes, thanks, Sahaja. Yep, talk soon, definitely. So, okay. So look, who's got some immense value out of this webinar? I trust you've really got something, and I've been really enjoyed serving you. So just give me a yes, or if you've got something out of it. Yep, thank you, Glenn. So yes, Martin, thank you. Great, Leo, yep, John, yep. Okay, well look, it's been absolutely fantastic to work with you, and I thank you very much for your patience on this webinar today. Thank you, Clive. And I look forward to serving you moving forward and being a further service. And you'll be hearing a lot more from me in the days to come. So keep your eyes and ears tuned in for some of the newer webinars that will be coming out on not just taxes, but on freedom and even the spiritual stuff. And if you're interested, especially on the OREC clearing and the spiritual clearing, and really, you know, ways to really grow your business and mindset stuff, which I've been learning, which I will be bringing out very shortly, to really live your soul's purpose and getting connected more with your purpose, just give me a definitely. Just put definitely in the chat. Just write definitely or def if you're really keen on that stuff. Yep, there's a few. Gives me a bit of an idea as well. Yep, so there's definitely interest in this. I've had numerous definitely's coming through. Okay, well, thank you very much. I look forward to serving you, and I shall be speaking to you again in the very near future. Thank you.